Hey everyone, what's going on? My name is Adialaga. I hope you guys are keeping safe. I hope you guys are doing well. Happy New Year to all of you. I wanted to create this video just to give an update on one of my previous videos that I made in June 2020, right when we were in the middle of the pandemic, when things seemed like they were getting worse day by day. But what do you know? The real estate market did extremely well, stock market at all-time highs, cryptocurrency absolutely killing it. So I thought I'll make an update on that specific video on where I'd be investing and which markets do I think will do really well in 2021. So let's dive in. So if you have seen my previous video, one of the things that I stated was it's a possibility that a lot of people may be losing their jobs, not being able to pay rents on time, will result into possibly the real estate market taking a hit. But on the other hand, the all-time low interest rates, and based on where you're located, if the immigration numbers are strong or people are moving to your location, you may see very, very good real estate numbers. Now, it seems like the prediction was pretty much accurate in the sense that some of the major cities, such as my own city, Toronto or New York or any of the big cities, we saw a lot of people moving out. And the real estate market, at least in certain sectors, for example, the condo market, apartment buildings, took a big hit in 2020, basically because people do not want to be in a congested space. People were looking for larger spaces, and along with some other dynamics, people rushed out of these cities, which of course took a toll on to the real estate market. But for the most part, real estate market, when you look at provincial or statewide or country as a whole, the real estate market did very, very well. This was for multiple reasons. Like I said back then, the very, very low interest rates, it allows you to have your same mortgage payment and just be able to afford something much larger because the interest rates are at all-time lows. We have not seen subpar interest rates in a very, very long time, and so far they're saying that it's going to continue like that for at least another 2 to 3 years. So we may see very, very low interest rates for the coming years, which will continue wanting real estate investors or property owners or even someone who's just buying for themselves to flock to the real estate market. Of course, in real estate, location is key. So location, location, location. And in this case, that's exactly what we saw. We saw a lot of suburbs, people flooding out to suburbs in terms of trying to get more space, and those type of markets have done very well. For example, a lot of people in the States have flooded the Texas or the Vegas markets where real estate prices were cheaper, they get more bang for their buck. You see a lot of people moving out from major cities into these smaller cities because now, not only can they afford more, but perhaps even for work reasons, everybody can work remotely, and this may be the trend for the next coming years. So a lot of money was shifted into some of the other locations, and real estate prices did very, very well for some of these reasons. And of course, other market factors, so much money being printed by all the governments. I believe 25 to 30% of all of the US dollar was created in just 2020. So much money printing, what is it going to cause? Inflation. Your dollar is going to be worth less. So people are flocking towards investments. And usually things like gold, silver, real estate are a very good hedge against inflation. This is one of the reasons why real estate prices have soared to crazy new highs, which sounds absolutely ballistic that we are in the worst economy. We're in the pandemic, things are going terribly, but the real estate market and some of the other markets are absolutely booming. But you have to deconstruct and figure out as to why that is. It's the low interest rates, the extra money printing, it just creates a perfect storm for some of these things to really hard assets such as real estate for these prices to do so well in times like this. And I truly believe that this may continue for the duration of 2021. Now, 2020 was actually the year where I accumulated the most amount of real estate. I recall I had a couple purchases back in March, right in the midst of COVID, and I had the initial thought of backing out of my investments, but really, at the end of the day, what I try to always preach is go after the cash flow model. If you can possibly get some built-in equity You're in a great location, the interest rates are excellent, and most importantly, if you can generate cash flow. Like I said in my previous video, a lot of these larger towns or a lot of the properties were priced to perfection, where at the price, if you're buying as an investor, you can't generate cash flow. You hardly just cover your costs, whether that's your mortgage payment, utilities, property tax. You hardly cover your costs, or sometimes you're in a deficit. And that's not the right way to invest. Even though some of those properties may be in a great location and you're going after the appreciation, the one thing that is not guaranteed in real estate is property price appreciation. Even though if you hold things over a long period of time, it's guaranteed. I mean to say that it's not guaranteed for some people who just want to buy today and flip within a year. You don't know certain uncertainties in the market that could catch you off guard. So to make sure that you're purchasing a good, solid investment, you have to make sure the location's perfect. You have the possibility of all the right market dynamics so that you're going to see great property appreciation. But of course, you're going to have a great mortgage pay down. Your tenants will pay down for your mortgage. Of course, some goes towards the interest, but a lot of it will be going towards your principal at these low interest rates. But most importantly, if your property can generate very good cash flow, you're seeing somewhere between 5, 6, 8, 10, 12% of cash flow from that property, that's a great asset. If anything was to reset, if the market takes a kick in the next little while, you're not worried because you can actually generate some decent cash flow from that property. So that's always been my mindset to invest, and that's the same mindset that I continue investing with and will continue investing with in 2021. 2020 was the year where I actually purchased the most amount of real estate, as surprising as that sounds. I was looking at the market, I found some great deals, and I saw that the property prices are going to appreciate in the locations that I was looking at for the next coming years, and thus I made those calls. If you would like to see my portfolio or how I buy, what are the different things that I look at when purchasing real estate, leave me a comment down below. Now, let's talk about Airbnb or the short-term rental space. It's very easy to understand that in 2020 and probably for the early to mid 2021, we're not going to see much international travel. What happened was a lot of the bigger cities, again, like New York and Toronto, which usually would do quite well in the short-term rental space, saw not a lot of people traveling to it because people were trying to get away, maybe to cottage country or somewhere where they had more space, something outdoorsy, some activities or something, some nice scenery to look at rather than just concrete buildings. So we saw a massive surge in drivable locations. Even though the numbers, of course, in the popular cities or the more urban cities were down year over year, not to say that there's still not a market there. I still have a lot of my properties in some of the urban markets, and we've done really well with a lot of people who are looking for a second space to come work, an office away from home, someone looking for coming outside of the country, looking to quarantine for themselves or a family or a loved one, people who are looking to move, are in the middle of a move, or someone who had some issues with their property for insurance purposes, needs to relocate. We've done quite well with all of these, not to mention also doctors and nurses that are right now or have been traveling to different locations. We've done very good in these urban locations with them, but of course the numbers are still not where they were the year before. However, on the flip side, markets such as cottage country or anything that is more experience, scenic, adventure, naturistic related have seen a massive surge. So if you are interested in purchasing, if you're an investor, you're looking at vacation rental homes, these type of properties have done very well and will probably do very well for the next coming years. As the regulations tighten up, these type of locations, which are already short-term rental friendly, will continue doing very well over the next couple of years because people who are in the short-term rental space know how lucrative short-term rentals can be. And anybody who's interested in continuing on their short-term rental journey, because it can be a very profitable business, will continue investing in these places that possibly have already legalized short-term rentals. Even if from a rental arbitrage or a property management perspective, there's tons of growth that these places will see. And just in general, overall, when travel does return, whether that's by mid 2021 or late 2021, all locations or the short-term rental space will see a massive, massive boom and a massive surge. So now's the time to get your ducks in a row. Now's the time to make sure that you have all your systems dialed in. Now's the time to make sure that you're already set up. So when that surge and boom comes, because of the decreased supply, a lot of smaller players who've left the space, now that the supply has gone down, when this surge comes back, it's going to be the perfect storm for you to do very, very well. So make sure that you're set up right for that. Now, let's talk about Bitcoin. Bitcoin has been the hottest topic, probably will be the hottest topic going into 2021. But what is Bitcoin? You've probably heard of it unless you're living under a rock. Bitcoin is a digital asset that is on the blockchain technology. Blockchain is a decentralized public ledger used to record transactions. Now, if you're wanting more details, then you should definitely educate yourself on Bitcoin. You can probably, there's tons of good information online, but here we're just gonna discuss Bitcoin a little bit as an asset class. Now, it was created back in 2009, and since then, it's been highly, highly speculative. It came very close to main media back in 2017 when we ran into the all-time highs. I believe touched just that 20,000 US dollars. And a lot of us, including myself, that's when we first heard or did more research on Bitcoin. I've been investing in it since 2017, some of the highs, but I've been investing in 2018, 2019, because I truly understood the potential that Bitcoin can have. Now, if we go back to my previous video, I said this is something you should educate yourself on. It's an upcoming asset class. And I still believe it will do very, very well in the next couple years to the next decade because it's here to stay. Now, one of the arguments that people have made about Bitcoin is it's not a currency. It can't be used as a currency, and it's true. By the time I send it to you, if I'm trying to send you $20, it may be 25 or maybe 15. But people are starting to understand the true potential of Bitcoin. The best argument for Bitcoin is that Bitcoin is the digital gold. If you think about gold has value because it's a scarce metal. However, we may find a new location where more gold can be mined in the coming future. Bitcoin has a finite 21 million Bitcoin. That mark will never change. That's how many Bitcoin there are. Regardless of what happens, there can never be any more produced. Unlike the US dollar, which again, we saw 30% extra printing. Because Bitcoin is so scarce, because there's only 21 million of them, institutions are finally starting to realize the more money that's being printed, the more inflation that's being caused, institutions such as MicroStrategy are starting to realize that Bitcoin very well could be the future. Now, just like I said, Michael Saylor at MicroStrategy just purchased over $1 billion worth of Bitcoin just in the previous year. I believe their average is right around at $15,000 per Bitcoin. Other institutions such as Grayscale are purchasing Bitcoin at mass. Now, what does this mean? Guys, like I said in my previous video, even a very small percentage, even if it's just 1%, 5% of your portfolio, you need to purchase or at least get introduced to this asset class because, yes, even though agreed, it's a very volatile asset class, the upside can be massive if it becomes even more mainstream and if every institution starts realizing that they need some Bitcoin in their portfolio. 78% of the Bitcoin today is not even liquid. I'll leave this post here. What that means is a lot of these institutions that are purchasing Bitcoin, they do something that's called an OTC transaction. That's an over-the-counter transaction. So to give you an example, Coinbase, which is a very popular exchange for regular retail buyers such as me and you, has a second body to them called Coinbase Custody. Now, what this means is all these institutions that are buying over-the-counter, they purchase Bitcoin and move it over to Coinbase from Coinbase Pro, which me and you use, to Coinbase Custody. These over-the-counter transactions don't impact the pricing of Bitcoin because they're not purchased on the exchange. Now, as this supply continues reducing and the demand continues increasing, some of this Bitcoin is just not liquid. So like I said, 78% of the Bitcoin is not liquid. So when the retailer buyers come in, there's more demand, but even less supply of Bitcoin, which leads to massive run-ups in the price like we're seeing today. Now, these institutions, they don't buy to sell in a year's time or a few months' time. They buy for the long term. If these institutions are buying for the long term, for the next 10, 20 years, that shows you the potential of this asset class. If you would like me to make more videos on Bitcoin and other cryptocurrencies, other altcoins, what are my favorites, please leave me a comment down below. If you're also looking to invest, I'll leave a link down below that's for Bybit. That's one of my favorite exchanges. I believe you get about a $200 bonus by using that link, simply by putting in around $500 to invest. Again, guys, it can be very volatile market, so just educate yourself before you invest your hard earned. Next up, let's talk about the stock market. The stock market absolutely killed it in 2020. It was at all-time highs, and that doesn't make sense to a lot of people who compare the stock market to the economy. One of the things you need to understand is that the stock market is very different from the economy. It's not the same thing. Now, when we look at the tourism industry sector or airlines, the stocks were beaten down by half the price point at some points, going back as early mid-March, 1/4 of the price. And some of those recovery stocks still may take some time to get back, even though you see that there's a large upside and you think that they're going to hit their old all-time highs again. Some of these industries have piled on a lot more debt. So they may not see those same prices for a very long time, even though the upside seems like it's there, and it still may go up from at the current price levels. But what we need to understand is, let's take airlines such as Air Canada. Going into the pandemic and coming out of it, they piled on a lot more debt. So for them to see those same types of profitability levels, it still may be some time before it gets there. However, on the other side, tech sector absolutely blew up and killed it, which, if you think about it, makes sense, because as we knew our life prior to the pandemic, it's completely changed. Everything's done digitally. Stocks such as Zoom, because of everything's just gone to virtual, just killed it in the year of 2020. And a lot of people are saying there may be some type of a sector shift in 2021, where we see, as things get better, as the vaccines roll out, some of the money goes back into the recovery stocks, which is a possibility just because the tech sector did so well in 2020. Going back to what I said last time, just make sure that you're using the dollar cost average method so that you're not buying at all-time highs. Really do your research. A very good way of investing is look around you. What are the day-to-day things that you use and you like? If there's a company that you like, if it's a product that you like, that's what you should be purchasing. Don't invest your money in something you don't understand, because that's the quickest way of losing it. So for example, if you're an Apple lover, rather than going out and buying the next iPhone, invest that money into the company, because owning materialistic items is not what's going to get you that's one step closer to actually creating wealth. Overall, I do believe that in 2021, the stock market's going to do fairly well. We may see a rotation a little bit out of the tech sector into some of the recovery stocks if the vaccines are able to roll out and if we're able to get back to the norm. But if we see a lot of mutations, more lockdowns, it's a big possibility that the tech sector continues booming. One of the industries or sectors that I'm strongly looking at is the EV sector. The EV sector did very well in 2020. Stocks such as Tesla, as I'm sure everyone's heard, but there's a lot more things coming into the EV. A lot new companies such as NIO, Chinese companies, and some other companies that are coming into the EV sector, and I think this sector will do very well, especially under the new Biden regime. Well, thank you guys. I wish everybody, again, a happy new year, all the best. If you got some knowledge or insight out of this video, please leave a thumbs up, subscribe to our channel, hit that bell icon, and I'll see you in the next video. Thank you.